Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hope all of you had a very nice weekend and a very nice day in the markets as well. And in today's markets, guys, well, as a matter of fact, we actually had a little bit of a bounce. What started off as a very brutal red morning, the SPY almost down 1%, the QQQ's almost down 1.5%, as follow-through continuation from the Friday sell-off momentum quickly turned into a bounce at the midpoint on the day. Now, after two gap down opens in a row on the SPY and QQQ, hourly oversold conditions, we knew that a bounce was most likely coming, but as of right now, that is really all it is. It is only a slight bounce in the context of an overall daily downtrend, and there's a lot more volatility catalysts on the horizon for this week, which we will talk about in today's video. So all in all, decent performance for the end of day recovery, but I wouldn't say we're out of the woods just yet in terms of volatility. So in today's video, guys, I have a few things to cover together. Number one, we're going to be going over the expectation for the week. What do we have on the table in terms of macro news events and also company earnings that we should be paying attention to? Number two, we're going to take a look at some of the technicals in terms of our major stock market rundown, all the major indexes in terms of the technical analysis, see where we stand in terms of our levels. Are any major levels being broken, or are we possibly due for a little bit more of a recovery rally if the news this week comes in positive? And lastly, of course, take a quick glimpse into the big tech names and follow that by my portfolio and the trades made today. It was a very nice morning to buy the dips, especially if you watched my top 5 options video from last night. But all in all, guys, fairly happy with today's performance. So I'll show you all the trades at the end of the video. A lot to cover in today's video. However, it will be shorter than usual. So let's get right into it. So the SPY up about 0.16%. The QQQs were the loss leader on the day, down about 0.32. But we need to pay attention to rotation, guys. Arguably more important than support resistance zone, more important than moving averages, more important than the RSI or the MACD is studying the rotation in the markets constantly. Why? Well, because when you have big sell-off days like Friday, where you see all of the major sectors hitting lows of the day at the very same time, that is synonymous with no rotation, aka money is leaving the equities market. There is no liquidity there. Everybody is just selling everything. However, the way this morning started off, the QQQs were heavily bleeding, but which two other major indexes were green today? The financials index and also your healthcare, which are the two other largest components of the SPY. When I saw that only big tech was down and the rest of the market was having some decent rotation, that was the sign that we may be approaching a local bottom. They may be bringing in the rotations and that it could be a good opportunity to be buying the dip. When you see bright red across the board, guys, you are pretty much positive that that day will end up red as a whole, and maybe you want to be a little bit more patient with your trades. So in terms of the heat map today, moving into that rotation analysis, you can see that most of the losses were had by big tech and some of your very big performers in terms of consumer defensives, Walmart and Costco, which have had a very positive last 6 months. Now they are being left behind. Big tech is being left behind, but look at the rest of the market, the rotation that was brought in today, very healthy in terms of market breadth. So I'm not saying that the damage is completely over. I am saying, however, that we need a lot more days that look like this, where big tech gets pressure taken off of its shoulders to perform, and where the bottom half of the market really starts participating to support the S&P. Moving on to the one-day relative here, you can see on the group performance, pretty much everything not having the worst day at all. More sectors were up than red, but the ones that were red, technology, utilities, communication services, and consumer defensives. On the 1 week, although we did have a nice bounce today, you will see that a lot of the major sectors are still red, which is why I say we're possibly not out of the woods just yet. Couple that as well with a lot of economic data points that we have coming out this week, and you have a landscape for a very volatile week in the markets. Number one, producer inflation numbers tomorrow and CPI release on the Wednesday session. Now we know that front and center in the last few weeks has all been a question about inflation and interest rates. So my question to you guys is, if these inflation reports come in hotter than the expectation, do you think that's going to be good for the inflation narrative or bad? Well, most likely it will be bad. Yields will keep going up and equities will constantly be under pressure and may even see further declines. Now, tomorrow, producer inflation, 3.4 is the expectation, which is above last month's read of 3%. This is already a hotter than expected read. This, however, is already priced in because that's what the market's expecting. Anything above this, and you may have a bad time, but anything below this already elevated number, and the markets could continue on to a bounce. Thereafter, CPI, same concept, higher than last month. We're supposed to come in at 2.8 versus the 2.7 last month. However, if we come in lower at 2.7, well, the markets will have a decent time with that. But anything hotter on these two reports that are already consensus elevated versus last month, well, you know what's going to happen, guys. The markets are just going to revert to interest rate temper tantrum and head to the downside. So keep that in mind. Then on Thursday, we also have retail sales. Retail sales for the most important month of the entire year, which is December. We'll get a glimpse into the consumer and how they were doing with their holiday shopping. And that is pretty much it for the week. In terms of earnings, more volatility catalysts, guys. We start the week off with a lot of banks and also TSMC. Now, TSMC is going to be quintessential to all of the big tech names out there, namely semiconductor names like NVIDIA. This is going to give us a good indication of whether or not the demand for chips, the demand for PCs, electronics, but most importantly, data center chips are on the rise if TSMC can maintain its very bullish guidance that it gave last quarter for the entirety of 2025, or do they possibly see some problems on the horizon, talking about possibly some export restrictions towards China and things of that nature. So TSMC is going to be a very big one. Other than that, guys, a whole bunch of banks, all of the major banks, in fact, JP Morgan, Citigroup, BlackRock, Wells Fargo, Goldman Sachs, Bank of America, Morgan Stanley, US Bancorp. So you can see pretty much every single major bank is on this list. And now that yields have been rising, since I know it's contrary to intuition, but since the longer term yields have been rising, guys, do you think that people are taking out loans more or less? Well, most likely less, right? So when you know that when banks, their most important metric that people look at, especially analysts, is net interest income. How much money does the bank make on its loans, right? It'll always make the same spread, whether the interest rate is 5%. If the banks can get money from the Fed at 4.5% and lend it out to you at 6.5%, they'll make 2%. If they can get money from the Fed when money's cheap at 2%, they'll still lend it out to you at 3.5%, 4%. They always make their spread. However, the reason we pay attention to this is the demand for loans going to be moving up in 2025 or lower? That's going to influence their guidance. And if their last quarter, they gave very good guidance. However, this quarter, we get the guidance for the full year. Now that we know that the Federal Reserve has tapered back their interest rate projections in terms of the federal funds rate, we were supposed to get 4 interest rate cuts this year. Now we're only getting 2. So will you see a lot of these banks revise their guidance to the downside? Possibly, and that would definitely be a weight to the downside on financials as a whole, and as well could contribute to bringing the SPY further down. If we cannot see some further upside momentum in financials, it's definitely going to have an impact. So all in all, guys, a lot of catalysts in the market. So even though I did buy the dips today, I bought them very slowly and very cautiously, understanding that we have a whole bunch of volatility catalysts on the horizon for the month of January. And as a matter of fact, if you did not see my video on the Saturday session, I highly suggest you watch the first 15-20 minutes when I go through the pros, the cons, the volatility catalysts, and the conclusions as to how I'm trading the month of January and anything meaningful, especially in terms of the narrative that the market is having right now, yields, inflation, Trump effect, Powell pause, all that stuff. I highly suggest you watch the video on Saturday because unfortunately I can't recap all this. It's just going to take too much time. So first 15 minutes of the Saturday video, you will find everything that you need in terms of that respect. So that is everything for your weekly presentation, guys. Now let's get into some of the juicy stuff, which is the technical analysis. So moving on to the SPY, guys. Well, it's very nice that we got a 1 day's worth of bounce. Double gap down open usually is synonymous with a buying opportunity, right? The markets don't usually gap down 2 times in a row. And right now, we came into hourly oversold conditions as well. We had a little bit of divergence right here, ascending RSI, but downtrending price action. Usually with that bearish divergence, double gap down open, you are going to start to get a little bit of a bounce. And as a matter of fact, it was fairly good, right? So you can see right here that we're trying desperately on the regular timeframes here. We need to reset the hourly uptrend. Without that hourly uptrend, guys, this is literally just a bounce and the bears can flush, right? So we need tomorrow to reset the hourly uptrend. That's what lets you know the daily lows are set, and then you look to see how high can the bulls bounce to get back the possibility of a new daily uptrend. Bounces are nice, as we've seen many times in the past. You can get some very nice bounces. However, if there is no daily uptrend continuation follow through, the bounce is only that. Lower high for possible revisit of the lows or lower. So nice to see the bulls react right here between 585 and 576, the first line of defense. They also filled the election gap as well today. So will be interesting to see, can they uphold the bounce or can they maybe just bounce tomorrow and then maybe get undone by CPI or the bank earnings? That is what nobody knows, guys. That's why they call them volatility catalysts. I cannot begin to predict the market amidst all of this volatility. There's just too many catalysts. The best we can do is be very cautious with our trades and position accordingly. If the markets do retrace down here, we know that we're buying. And if we have a very massive bounce, the last thing you want to do is start buying the tops, thinking we're going for the all-time highs, forgetting all the volatility catalysts that remain in the month of January. Big tech earnings, Trump inauguration, Powell pause, January 29th. Last thing you want to do is buy up here, get trapped, and then just get caught in another volatility swing to the downside. So we want to be buying days like today, the oversold flush levels, double gap downs for a little bit of a bounce. And then when the trades come back up here, we take some profits and then we wait for more possible opportunities. So hopefully that makes sense. All in all, though, the SPY, even though it's recovered a little bit, guys, we are still in the context of weekly downtrends. So just remember that weekly downtrends do mean that monthly consolidation is underway. And I've said it many times on the channel, the worst possible case scenario for the S&P right now is possibly down here, 565 down to about 550. That should be a basing area. That is really the 50 EMA on the weekly. And you can see pretty much since the October sell-off of 2023, we have not really grazed the 50. I think that is probably max pain for the S&P for the month of January. And that would be a top to bottom decline of roughly 10%, almost synonymous with what we had when we had these same inflation concerns and interest rate concerns higher for longer in fall of 2023. Now, moving on to the QQQs, same analysis as the SPY virtually, right? We know the context is a daily downtrend after two back-to-back gap down opens with some hourly oversold conditions. Nice, we get a little bit of a bounce, filling the gap almost with the bounce. However, a bounce is only a bounce until you confirm the hourly uptrends. Confirm the hourly uptrends, perfect. Your daily lows are set, and then we look for the size of the bounce on the daily. However, pay attention, there is a little bit of a resistance area above it. We just blasted through it. It used to be support, now it will be resistance. So this is going to be the closest location that a bounce could possibly be topping out in. And if we top out the bounce tomorrow and get negative CPI, it's going to be resistance into another continuation of the daily downtrend. So please keep that in mind. A bounce so far is nice, but it is not the end all be all. The context is still a daily downtrend. We are below the moving averages, below the resistance level, and also in the context of weekly downtrends. Weekly downtrends mean that you are in for monthly consolidation. And in my opinion, the maximum amount of pain that could be in store for the Qs would be maybe down to about 470. That would be a top to bottom decline for January and maybe early February, well, since December really, of about 12.71%. That is arguably synonymous with the same percentage declines that we had in the same time period, fall of 2023, when we had similar inflation and higher rates for longer concerns. So keep that in mind. The bounce is nice, but it is only step number one, guys. A lot of work for the bulls left to do, so I will still remain cautious in my trades. Today, we had a nice bounce on financials, but we know the context of the week is going to be a ton of financials earnings. So price action, what I'm going to draw on the chart right now, is almost meaningless. If bank earnings are positive, we can reverse this daily downtrend with a very nice engulfing move, and then we take it from there to see if they can reset. However, if bank earnings are bad, you guys know what's going to happen. We may bounce the next 1-2 days, but if those bank earnings come out poor, the daily downtrend will continue, and then we're probably going to come into the lower level down here, about 46 down to about 45.50. That is the closest area of previous resistance, support, which should now be acting as support, and slightly below the 26 EMA. We have not really lost the 26 EMA, guys, since, you guessed it, fall of 2023, when we had a similar market environment. Right now, the market was throwing a little bit of a tantrum, right? Higher for longer interest rates, uncertainty around inflation. So we're kind of in the same context right now. Weekly downtrend is maintained, which means that monthly consolidation is still underway. And lining up that same little box I showed you, well, this is it on the monthly, and the 12 EMA should be curling up here as well as we progress through this month. So this is probably one of the max pain areas for financials. I'm not saying it's not going to go lower. I'm just saying that is probably where we get a healthy bounce, and that would be a top to bottom decline of around 12-13%. Now moving into healthcare. So healthcare benefiting from some decent news today overall as a sector, and right now the daily bounces continue to be underway. So very nice bounces from the bulls here. Daily uptrend is maintained, and as a whole, we need to remember the context, right? It is a weekly downtrending cycle right now. So keep in mind, even though we have the daily uptrends, the pain may not be over because the bulls still have a lot of work to do. We are almost running in to our weekly moving averages here, the 12, the 50, and the 26. And keep in mind the size of the bounce, even though the size of the bounce looks good on paper, it's only a 50% retracement higher. This gives the bulls 50-50 odds of resetting into a new weekly uptrend, or the bears just steamrolling us over and heading towards the lows again. You would like to see a bounce at least as high as 143, 145 to give the bulls the best chance at reversing these longer term timeframes. There's a lot of uncertainty around the sector, especially with Trump coming into office, uncertainty around what his policies are going to be around healthcare reform, and also what are RFK's policies going to be in terms of bringing on more transparency for pharmaceutical companies. I'll remind you the context on the longer term timeframes, the monthly, right? We know the weekly is a downtrend. The monthly also flushing the lows, so now arguably equal lows, lining up with the 26. The 26 has been held by healthcare for a very long time at this point, arguably since COVID, right? So it's been a very long time they've held it. Sometimes they come a little bit below, but for the majority, they have held this region. So also decent resistance, current support for the markets. So I would not be surprised if healthcare is trying to find its local bottom amidst the uncertainty. And right now, top to bottom, peak decline was around 15%, and that possibly could be some of the ending moves for the healthcare sector, unless Trump really brings in something crazy, right? So that's not too bad for healthcare as a whole. A lot of people have been looking at these trades. Johnson & Johnson, not a bad opportunity if we're taking a look for a risk to reward setup on one of the healthcare stocks that has a favorable setup right now, 2 years worth of support. So the trade pretty much goes like this. If the entry is here, the stop loss has to go below there, because that would invalidate 2 years worth of support, and we may just be going lower to the possible 133s down here, which is the next level, right? So the trade is as follows. The entry is really right here, and the target is the top end of this green box right there. It's roughly a 3-to-1 trade, so relatively good risk to reward, but just keep in mind, Johnson & Johnson is not Palantir. It moves relatively slow. That being said, another beautiful trade in healthcare is TMO, Thermo Fisher Scientific, arguably another company that doesn't stand to be affected that much by Trump's policies, and the trade is pretty much similar to the Johnson & Johnson one we just looked at. Yes, it's run a little bit from the bottom, but the risk reward is somewhat still decent. We'd be targeting the highs, and now right now it's pretty much a equidistant risk to reward, because your stop loss would be below here about 475. So if there's a slight retracement back into this area, it would open up some better risk to reward. But TMO looking very solid, guys. It's pretty much a tightening range of accumulation for the last 3 years almost. The monthly looks pretty good, and they have been improving fundamentals. One of the most solid companies in all of healthcare right now, in my opinion. Moving on to SMH. SMH as well, guys. Not too bad of a day. I know they dropped early in the morning with NVIDIA and their news, but all in all, guys, we didn't really lose any major levels, but we also didn't gain much today either, right? So it was a context of a daily uptrend, tried to break the highs, couldn't do it, and now we're right back here, trapped in the gulag, right? So lack of clearly defined trends right now. Really trapped on the weekly between 260 and 250. If you want to see semiconductors break out, guys, it's very simple. You have to close a weekly candle above 260. Until that time comes, we are just going to be perpetually trapped in this very same range that we've largely been stuck in since the month of August. To the downside, support remains put at 233, down about 216. So the way that I'm playing semiconductors, I've mentioned it a bunch of times on the channel, but in case you are new or maybe you just forgot, well, any big declines on semiconductors, I'm looking for individual names or SOXL, and I'm just looking to write short puts under the market, creating buy limit orders, and if they don't get filled, I'm just pocketing a ton of premium. I've been having a lot of fun with the semiconductor industry as a whole over the last 2-3 months during this consolidation, and truly, to be quite frank with you, other than NVIDIA, I haven't been assigned much of any single semiconductor plays at all. It's been a very profitable endeavor. Just, whenever we come down, I write short puts on some of my favorite names, NVIDIA, AMD, ON Semiconductor, LRCX sometimes, TSM sometimes, right? SOXL sometimes. You just take your pick and go for the levels on those ones. Moving into the IWM right now, so small caps, not too bad of a day, 0.19% to the upside, but we know what the context is, right? Clear daily downtrend. You have the low, equal high, lower low, daily downtrend into the 200-day moving average and into the larger form support area, which is 216 down about 207. Now, small caps aren't looking the worst. However, if yields continue rising, we get a bad CPI, bank earnings are not fantastic. Well, keep in mind, guys, 17%, right? I'm not making this up. 17% of the Russell is financial services, right? So if financial earnings are bad or if CPI is bad, this trade has a lot of risk on it for this week. So this one is not one that I'm playing this week. However, if we do decline here, guys, and come into possible daily oversold conditions on these, which we're kind of very close to, if we come back down 210, 205. I might be interested in starting a little bit of a position, but that's all it's going to be, a little position, because right now we're kind of trendless, daily downtrend, weekly downtrend as well, which is just synonymous with monthly consolidation, right? The bottom end of which is probably 205 down about 200, where the bulls find a lot of support. And now lastly, the Dow Jones up about 0.86%. Nice little recovery on the value sectors as a whole. Fairly obvious, right? The bottom half of the market was the one participating. Financials, healthcare, industrials, a lot of the components of that are in the Dow Jones. So nice to see them bounce a little bit, especially where it mattered the most. We have now filled the entire election gap, and we are slightly holding on to support down here. 42,000, 41.9, roughly the same thing, right? But the context is still a daily downtrend, guys. So even after 1 day's worth of bounce, apply the same rules I was talking about earlier, need the hourly uptrend. So far we have it. Can they continue? And if they do choose to continue, guys, what do we need to do? Need to bounce a little bit higher, right? Because the size of the bounce right now from the lower high is not too bad. It's roughly about 38.2%, but 38.2%, guys, is just not going to cut it. What you really need to see is almost a 50, 75% engulfing move or 100% engulfing move, and that gives them enough space to then use this support area again, try to find a base and go for the daily uptrend. Until they prove to us that they have the daily uptrend, I cannot say this weekly consolidation is finished, and I can also not say that this monthly consolidation is finished either. Max pain for the Dow Jones, in my opinion, probably somewhere down here, 41,000, down about 40,500. That would be a top to bottom decline for the Dow of roughly 7 to 10%, which in all fairness is almost the exact same thing we got in fall of 2023 when we had some of the same concerns. So take that for what you will. That is your analysis here on all of your major sectors. The yields, we covered them in detail on the Saturday video. So if you're curious, I won't be doing yields every single day, only when they make a significant move to the upside or downside. Gold and oil we've covered as well in the Saturday video, so I'll save those for tomorrow. Now, in terms of Bitcoin, Bitcoin did something today that provided a beautiful, beautiful buying opportunity. We literally touched into the support level down here, 91.5 down to about, let's call it 87,000. Bitcoin at one point today was down almost 5% before having a very nice retracement and recapture of the losses intraday to now where we stand at a slight cool 0.13%, so roughly break even with the last 3 days of trade. So daily downtrend is now established clear as day, but with a very nice engulfing move, the bulls have created a lot of space off the lows, nice hourly uptrend. Possibly we can put in a little bit of a leg higher tomorrow if the bounces do continue. However, keep in mind, guys, overhead resistance 101.3 down to about 98, and the head and shoulders pattern is largely still in play for these markets. The S&P had a similar pattern. I'll remind you, I didn't bring it up today, but it should be fairly obvious, right? The S&P 500, very, very clear head and shoulders pattern, and today's flush is not the follow through. Usually you can come down all the way down to these levels down there. So just keep that in mind. For Bitcoin as well, the all-time head and shoulders flush, in my opinion, could bring us down to the mid 80s, call it about 85,000 down to the 200-day EMA, which is just about 80,000. I'm not saying it's going to get there. I'm just saying if it breaks, it has a good chance of going down there. As of right now, the bulls respecting the levels. So the way that I like to play this, as I said yesterday in the top 5 options video, is writing short puts under the market, getting some good premium, putting in the buy limit orders in the event it happens. And if it doesn't happen, perfect. I'm making a decent amount of money on the sidelines pretty much for those buy limit orders using short puts as my intermediary. Now, the rest of the crypto did not have as good of a day or as good of a recovery as Bitcoin. And I was saying this on the Saturday video as well. Ethereum was down at one point over 10%, and the altcoins today just getting destroyed, right? Why is that the case? Well, because Bitcoin dominance remains the strongest. It stands to argue when you're unwinding a risk on trade that was put on after the election, all of these risk on trades are being unwound one after the other. Bitcoin and crypto is being unwound, but also a lot of the other famously momentum-driven names, SoundHound, right? SOFI, which we'll take a look at in a few short moments on the channel. Palantir also has lost a ton of momentum. Tesla has lost a ton of momentum. I'm not saying that these are meme stocks. These are momentum and risk on stocks. It's completely different, right? You can go through a lot of the quantum computing stocks like Qubit or IONQ or other names of the like, right? Like ACHR. A lot of people are looking into these aviation plays. all of them are down. So it stands to argue crypto as a risk on trade will be down as well. So just keep that in mind. It is beholden to Bitcoin's performance. If Bitcoin stays sideways or slightly weak, well, then altcoins as well will stay sideways or slightly weak until we get that risk on environment again in the markets, which might only be able to happen at the end of the month of January. Now let's dive into some big tech names, shall we? So Apple down about 1.03%, coming down into the location where we were calling out for a few weeks ago in terms of the retest, right? So this is one giant breakout, retest, and possibly have a little bit of a bounce. I'm not saying run to the all-time highs, but could we maybe bounce and then dive into some form of a tightening range, exactly like we did right here, right? Tightening range before further expansion? Yes, probably. So right now, Apple's not looking too bad, bouncing off the 26 EMA on the weekly, which is roughly 230. Now, this is the last line of defense for this support level, because if we flush this and use it as resistance, we're heading right back down to my favorite one, which is about the 220. I would not mind writing some short puts on Apple close to 220. It is the 200-day moving average, and that will be a top to bottom decline on Apple of roughly, let's call it 13-15%. Usually in the context of a bull market, buying Apple when it's down 13-15 usually is a decent buying opportunity. Like, look at all these drops here, right? Down 15%, good buying opportunity. From here, top to this bottom right down there, 16%, usually good buying opportunity. This one right here, down about 15-16%, same thing. So if Apple comes down from its high all the way to 220, 14-15%, that could be, as I just said, a decent buying opportunity. So as of right now, even though we do have a daily downtrend, even are we coming in to daily oversold conditions, if ever this week is not favorable for the markets, PPI, CPI, financials, earnings, and Apple gets dragged down into the mix, I will be sitting down here for a little bit of a bounce trade on Apple. And that is pretty much everything for that, because it's tough for me to add any meaningful size up here just because of the valuation, guys. They're not growing revenue that fast, and the valuation at 220 is still a 3.2 peg. So you have to play this one a little bit carefully and not commit too much size. At the end of the day, Apple is Apple. They always kind of find a way to get it done. Most of that is not so much from organic new stock shareholders. It is largely done through buybacks. But I mean, you know, the means justifies the ends, I guess, right? So moving on to AMD, let's move on to AMD. So AMD, something must be wrong with this chart today on TradingView, guys. I've been having problems with it all day. For some reason, it's showing that AMD is green. I'm not too sure. I'm going to reach out to their customer service because, you know, AMD is not supposed to be green. It's supposed to only be red, right? So there must be a problem here. But anyways, I mean, let's just analyze it with the problem on the chart. So somehow has a green candle right now. Not too bad. Even in the after hours, I mean, must be another problem here, because in the after hours, it's up another percent, right? Now, obviously, I'm being sarcastic here, guys. You have to have a little bit of humor, right? Especially as someone who I do have an AMD position open. Even I can laugh at how badly this one has performed, right? That being said, I still do believe in the thesis, and I think the thesis of this company is more important than the price action currently, because we know the price action has not been all that fantastic. Daily uptrend was nice, but got completely flushed, so now the bulls have to start everything from scratch. So although we have a nice little bounce this morning, right, which started as the continuation of a nice new hourly uptrend, hourly uptrend is fine, but give me a daily trend change. And even if you give me a daily trend change, you have to give me a solid weekly bounce. As you saw, this is a weekly downtrend. And here, the weekly bounce was barely 50%. And I was saying, guys, with such a weak bounce, would not be surprised if the markets take a turn for the worst. AMD is just going for another leg down. And leg down they did. Now, keep in mind, we are at the 200 weekly moving average, which is this beautiful green line right there. And below support stands between 113 and roughly 99. In my opinion, guys, we're coming into max pain for AMD. 115 out of 100 is probably where we find a very good base of support, because at that point, the valuation becomes very, very, very cheap, guys. Right now at 115, 118, we're arguably trading right around a 1 peg. And with the expansion of the EPS and their revenue over the next few years, and expansion of gross margins and net margins, I would not be surprised if this is pretty much, you know, sentiment bottom for the stock, but also fundamental valuation as well on a forward basis. Very beautiful EPS expansion, very nice revenue expansion. So now's the time to be building some positions on AMD. Am I calling the absolute bottom on AMD? No, but this whole area, guys, 115 out of 100, if we're looking to build positions slowly, and we agree with the thesis of the company's expansion into the data center business, not saying they're going to trump NVIDIA, not saying they're going to take the lead from NVIDIA at all, but are they going to be able to gain a little bit of market share and increase the revenue and EPS a lot faster than they have been in the last few years when they did not participate in that? Absolutely. So that is what I'm going for personally on AMD. So right now, 1 day of bounce is okay, but we'll see how it goes. If it dumps a little bit further, I will be adding to the positions down there. Moving into Amazon right now. So Amazon, I mean, not too bad of a day today, 0.22% to the downside, but we are in the context of a daily downtrend on this chart. Let me just make things bigger for you guys, because I always forget. For me, they're pretty clear, but I forget some of you guys might be watching on a phone. It's kind of small, my bad. So daily downtrend here on Amazon, clear as day. The below support level is 215 down to roughly 208. It's not the strongest one, but it is the 50 EMA, a little bit lower than that as well. You do have the weekly moving averages. 214 is the 12 EMA. The biggest area for me on Amazon where I really get interested, guys, is if we continue having weekly downtrend continuation and also monthly consolidation. 4 or 5 months of nice rally has been cool, but if we get some monthly pullback with all the volatility catalysts, and I can find Amazon again between 200 to 190, I will be going shopping in a pretty heavy fashion, especially for some call options. But as of now, we've been kind of consolidating after the Powell flush, daily downtrend, so I wouldn't be surprised if, even if we do get a bounce, any bad data in the market is just going to bring this one down into further daily consolidation, into further weekly downtrend, into further monthly consolidation. And even if January is red for Amazon and early February too, would that look so bad on the chart, guys? Just going for a monthly higher low for further expansion through 2025? No, and I do think they will have a fantastic 2025, but early on in January might get a little bit bumpy. Anyways, to reverse into an uptrend, well, obviously we need a decent sized bounce, higher lows and higher highs. Until that time, the bears remain in short-term control. Moving into Google right now, down about 0.46% today is Google, but not the worst for Google, right? They did not lose. I mean, this support level is so not strong. I'm not going to say weak, because weak sounds bad, but it's not the strongest, right? It is so, well, I'll say weak. It's so weak that it doesn't even get a box. The nice areas get a box. This one just gets 2 lines. So keep that in mind, right? So 191 down to 188 is the current support level that we're finding a basing of support into. 1226 moving averages are sitting right there, but we are also kind of somewhat directionless on Google. It was a daily uptrend pushing towards all-time highs. We've given back all that move, right? So this one is going to be beholden to the market. If the markets have a good day, well, Google's going to have a decent day, push back towards the highs. Do we have the catalyst and the overall bullish market sentiment to send this one massively beyond its all-time highs? Probably not, and considering the fact they have earnings first week of February, this stock may be muted for the next couple of weeks as we move through these volatility events, of course. In terms of the weekly, it's not looking too bad, just kind of barcoding here at the top. However, if we do flush these lows, 188, that will be a weekly downtrend. And in my opinion, if I can find Google again in the low 180s, I'm going to be going shopping and resetting some of my leap calls. You guys know I closed a beautiful leap call last week on Google that we opened all the way down here and closed for almost 130% profit on those leaps up here. If we come down here, I will reset for further time, possibly June 2026, and going for an 80 delta strike if we come back to the low 180s. Moving into Meta right now. So give me a very brief moment. I'm making some decent time on this video, guys, so let's not sacrifice it just yet. So Meta down about 1.22% today. I mean, Meta's just doing Meta things, right? Daily uptrend is nice. Looking to find a higher low, anything above 584, higher low for possible further trend continuation. But same thing, all-time high is going to be big resistance, and I don't believe the market environment right now is one that maybe warrants Meta just blasting off 650, 700 just yet, right? It may be a little bit muted for January. However, that being said, they are holding support, 598 down to roughly 582. Is going to be final support. We will see. If we flush these levels, I'll let you guys know. We're probably heading back down to 550. We'll tackle that when it gets there. But as of right now, Meta's not looking bad at all. Weekly uptrend is still being maintained. Crucial level, though, is that 582. It's the daily level. It's also the weekly level. You flush this on the weekly, and we're heading right back into monthly consolidation. It wouldn't look that bad, right? Consolidate back into 540 and then rally the rest of the year. So that is one thing that I'm going to be watching out for on Meta. But as of right now, very tough for me to position on this one, even though it looks amazing for the retest and run. I'm just not sure the overall market landscape will permit big tech to run, you know, much before we get through a lot of these volatility catalysts and the company's own earnings end of January. Moving on to Microsoft right now. Microsoft also down about 0.42% today. Most of all, big tech was down today, except somehow for AMD, but the chart must be broken. So moving into Microsoft, Microsoft also finding support in its own respective 2-line zone. Now, this area is not as strong as this one to get a box or this one to get a box, but it is some form of a local support area, also around the green line right here, which is your 200-day moving average. So Microsoft trying to find a local bottom, but it is still in the context of a daily downtrend and in the context of weekly consolidation. Unfortunately for Microsoft, we have unraveled most of the momentum that we achieved in the month of November and December. We've now given back most of all that weekly move. So now we are back in the gulag pretty much, just like semiconductors, SMH and stuff like that, right? Just kind of trapped between two levels, overhead resistance, 434, 425, and all the way down here below support, 400 down to about 390. Trust me guys, if we move any lower than this on Microsoft, even prior to earnings, down here, 410 or lower, we almost got there today, 412. If we can find 410 or lower, I will be firing off some short puts in the 400 to 390 level, probably with about 30, 45 days worth of time. I know it's an expensive trade, but it's a trade that I have a lot of confidence into. I do still have my leaps, I have my call debit spreads, but as of right now, Microsoft is just range bound. But keep in mind, the company has been improving its fundamentals this entire time while it's been range bound. So I do think this is a bullish area of accumulation. Moving on to Netflix right now. So Netflix up about 0.31%. Not the worst day for Netflix. At least they have 1 day of bounce in the last 10 days of declines. That being said, 1 day's worth of bounce, guys, is not the end all be all, right? Let's just say it how it is. The moving averages have now crossed below. We are coming into daily oversold, but that just could result in some form of a lower high bounce. Then it's up to the bulls to recapture the daily uptrend. If not, we are just setting a lower high and possibly revisiting the lows as we continue embarking on this weekly consolidation phase by Netflix. It is still, technically speaking, a weekly uptrend, trying to find a weekly higher low. As of right now, they have not found it, and we are also in monthly consolidation. My level for Netflix that I'd be really interested in, keep in mind, Netflix has earnings next Tuesday, so the price action could be somewhat limited. But if ever Wall Street finds something, and you guys know they can find things all over the place, even if they don't exist, you know, cue the sell-off right now, in other words. So if for some which reason Wall Street finds something they don't like in this report and the stock comes down 5, 6, 7, 8%, even though I think it's going to be a beautiful report, and it should be, and we come back down 770, 750 area, that's where I'm interested for Netflix, but I'm probably not going to be playing it before earnings. Moving into NVIDIA now. So NVIDIA also was down about 4% on the morning and recovering a little bit. So, it did respect my little box right here, 130 down to 125. We've been saying this has been support for a very long time at this point, right? It's reacted and reacted and reacted and reacted and reacted a ton of different times. So no surprise that it's doing it again. Failed breakout of a daily uptrend, enter the daily flush. We have now lost all forms of trend. If you want the bulls to get the daily uptrend back, they need to set the higher highs, higher lows, and then higher highs. As of right now, trendless and directionless on NVIDIA, just sideways consolidation, trapped above, or below rather, 147 down to 142 overhead resistance, and current support, which stands at about 130 to 125. I already have an NVIDIA position. I'm not looking to build more. I have already built NVIDIA positions in this area. The next position for me is going to be writing short puts, 120 down to about 115. A few of my Discord members, even though I didn't take the trade myself because I already have the exposure, but a lot of people were able to find some good success this morning with the 122, 121 short puts for Friday. And by this afternoon, we're deep into profit, guys. Just buying the pain on the open, essentially, by writing short puts down there. Now they're up some decent gains. So congratulations to all you guys who watched my top 5 options video yesterday. That trade opened up on NVIDIA, and probably it's already even good to close. So nice setup right there. But if we break down lower, guys, I will be ready. 119 down to 115. This is the stronger area for me. 50-day moving average would be right there as well. And now, Tesla, so moving into Tesla today. So I'm not too sure why Tesla is also green. I thought Tesla was only red recently, right? No, I'm just kidding, of course, guys, but that's the sentiment, right? You have to recognize when the sentiment around something, when people start saying it's over, quote unquote, usually you're getting close to a temporary bottom, right? So that being said, daily downtrend is clear as day. The bulls are trying to protect this last area, guys. 375 is absolutely clutch for these bulls. If they can break 425 to the upside, new daily uptrend is in motion, and that would mean your weekly higher lows are set. And in the context of this nice weekly uptrend, you would be looking for a new weekly leg of momentum higher, challenging the prior all-time highs. So the bulls have a lot of work to do still. I'm not saying that they're going to do that in the event we roll over from here. No surprise, it is already a daily downtrend. We would just be flushing a bit lower. And the next area of support is 360 down to 330. This is where I would personally not mind buying a little bit of Tesla, or if it comes down hard here, I'll be writing some short puts. 335 down about 320. If you don't want to use this one, you can also use the cheaper one for short puts, guys. I'm not saying buy calls on TSLL. Don't misinterpret what I'm saying right now. I'm writing puts under the market on TSLL. And this area right here of congestion is that same 350, 330 area on the main Tesla chart right here. So that's the area that I'm choosing. So if you don't have the amount of capital to write short puts on Tesla, of course, not a lot of people do. It's like, 35 grand, right? TSLL is one that I'm using as a proxy. As of right now, the bull's looking fine, but pay special attention to if we break this level, because if we do, we're coming right back down to 360, 350. And now moving on to Palantir before last. So Palantir continuing on its decline today, 3.39%. But I mean, such as a very normal pullback for Palantir, right? Now I know the percentages are large, 25%, but also keep in mind how much this stock has ran, this entire year so far, right? If you take the January candle right here, the stock literally ran, 5x pretty much from 15 to 85, more than 5x. So it's completely normal. A 20% pullback on Palantir is like a 2% pullback on Microsoft type of thing. You know what I mean? So the volatility is there. That being said, daily downtrend in motion right now, any form of bounce, and we're not even close to being daily oversold yet, but the short-term time frames are getting a little bit oversold. The hourly has been oscillating, oversold and not. The 4-hour is now oversold. That's very interesting too. So in the event we get a little bit of a bounce, I want to remind you what is above us. Above us is your short-term moving averages and the support, which is now resistance. Talking about 69 up to about 71-ish. This little zone right here could provide the bears an opportunity to make another attempt to flush, or the bulls can be able to possibly save for a daily uptrend. That we have to watch when it happens. But one thing's for sure, below support range stays put at about $60, just under $60. And even if we do continue, guys, this daily downtrend into 60, is it that big of a deal? No. What are we looking for here? It is a nice weekly uptrend, looking for a weekly higher low. Anything above $40. Just looking for a higher low for possible further trend continuation, or maybe just some sideways consolidation as Palantir moves into its new very rich valuation and kind of also waits until earnings, which is going to be the 10th of February. All in all, Palantir is right now in monthly consolidation, which is perfectly normal. Nice rallies, monthly consolidation, nice rally, monthly consolidation, rally, monthly consolidation, now rally, and you guys guessed it, probably some monthly consolidation. I would be interested personally if it comes back down to 50, 55. But don't wait for me, guys. I have shares down here at $11, $12 for my long-term portfolio. For swing trades at these heightened levels, I got to get the best possible prices. And for me, that's 55 to 50. If it doesn't get there, no problem at all. I'm not saying it is going to get there. I'm just saying if it does get there, that is actually where I want it, right? So hopefully that's clear. And now lastly, SOFI. SOFI, a bit of the same concept as Palantir, right? The stock has run an absolute ton, 2x in a very short amount of time, in about 2 months. So that being said, it needed to cool off a little bit with a daily downtrending fashion right now. We are arguably losing the last line of defense for support, which is roughly 14 to 1350. So we're not, we're oscillating between losing it and not. One thing's for sure, though, weekly downtrend is clear as day, and that also means that we are in monthly consolidation now. So can consolidation continue? Yes, absolutely. Where am I looking to buy SOFI? Well, I'm already in SOFI with a little bit, but where my DCA is going to come in, one at 12 and one possibly in the lower 11 to 1050 range. I'm not saying it's going to get there. I'm just saying if I have the opportunity to write some short puts at 12 or at 11, I will be taking that opportunity to bring down my average cost from around 1360 for my current shares all the way down into kind of the 12s and 11s. And then we will be looking to possibly ride this one into expansion for 2025. But January could be a little bit bumpy, guys. I'm not playing SOFI this week. Why? Because we have CPI and we also have bank earnings, two things that affect interest rates. And you know what banks don't like. Even SOFI, at the end of the day, is a bank. They make money on net interest income. And that being said, they will not like it if the rest of the banks lower their guidance. You can pretty much anticipate that if that's the case, SOFI as well will reduce their guidance, and they have their earnings Monday, the 27th of January. So for this week, I'm staying a little bit cautious on it. I still like the company, but you got to kind of know when to take your foot off the gas, especially in the face of these volatility events. So that's pretty much everything for your market rundown, guys. Now, in terms of the trades, well, for the trade setups, we'll do a few here and there throughout the week. But yesterday in the top 5 options video, I literally gave like 15 different trade setups. So you guys should have a good idea of the trades that I'm looking at, right? Now, in terms of the actual positions, let's take a look right here. So you can see the portfolio was barely down today, like a $42, right? We're still up for the year. If I just put this one back, we are still up for the year, like 2.6%, which is better than the indexes, let's be honest. We've given back a little bit of gains here over the last week with the rest of the markets, but that's fine. This is just since the beginning of January, right? It's barely 2 weeks old. So which positions did we add today? Well, we added a lot of nice trade opportunities, pretty much all of them from the top 5 options video of yesterday. These are all short puts. So benefiting from the increase in volatility, benefiting from the quick and fast declines with a spike in volatility to write some options well below the market. Look at these BITXs. This is what I was saying, right? 40 or under, 38 puts for 27 cents. That is more than 0.5%. Look how far down that is on BITX, guys. This is such an easy trade. Easy trade. And if it's not, if I get assigned, I don't even mind, right? So we got this one down here, and look how far it is now with Bitcoin's recovery. Even if you measure to the low of the day, right? That would be another decline on Bitcoin. After being down 5%, Bitcoin would have to drop half of 18, another 9, would be down 15% on Bitcoin, right into the 200-day EMA here, and also right into the previous resistance, which is now going to be support. I went with the 38 strike, guys. And now from here, if Bitcoin wants to do it by Friday, that will be a decline of 26% on BITX or 13% from there on Bitcoin. Very easy trade. Conservative trade. I could have written strikes a lot higher, but that's not what I'm doing, guys. I told everybody, right? I like to play these volatile names, but I'm not playing them to collect the most amount of possible premium. No. I'm just using them to have extra margin of safety and playing them at levels that I actually want. This would be like Bitcoin 83,000-ish. I do want Bitcoin there, so that's why I wrote that option. Next, in terms of the new plays that we wrote for today, we went with some Palo Alto, also on the top 5 options list yesterday. We got 94 cents, which was not the best pricing of the day. We got it when Palo Alto was down about 3%. It went down over just over 4% today. So we got a good price. We didn't get the best price, but that's not the point, right? The thesis was, is this general area pretty much 167 down to 160 is support. So I want to get getting as close as possible to 160. And I did. I got the 162.5s, not that bad. Extra about 3-4% of margin of safety by Friday. Daily oversold conditions, and I'll remind you as well, we are weekly 50 EMA. That being said, we are also monthly 12 EMA in monthly consolidation right now. So I do not mind buying this one. It's a nice monthly uptrend. It's an industry leader in cybersecurity with CrowdStrike. They're pretty much number 1 and 2. So I do not mind taking this one, especially because semiconductors this week, they'll be volatile because of TSMC. The banks and fintech, they'll be a little bit volatile. So Palo Alto doesn't have their earnings much before, end of February. So this is one that may not be moved so much by the rest of the market. And I like the fact that we are daily oversold into big support below the 200-day EMA at a confluence of factors. So that's why I'm into that trade. Now, lastly, SOXL, same concept, presented it yesterday in the bonus trades. SOXL was down. When NVIDIA was down this morning, SOXL, I was saying there's a few ways to play this one, but the way I like playing it is being ultra conservative. At the lows of the day at around 27, we went shopping early this morning, and I went with the 22s. 22s are 17% below. Semiconductor index would have to drop 8%, 8.5% already on a day where it was down, 2-3%, it would have to drop 8% more. So I went with the 22 strike, and look at the premium I got. I got 15 cents, which is well above our 0.5% rule. You might ask yourself, well, Will, these are tiny positions. Why did you go so small? Well, my answer to you guys is, well, all of these things in the way, and also all of these things in the way, and also the rest of what we have in January. So I don't mind buying the dip, but as I said, I'm going to be buying the dip slowly, and I'll be doing a few contracts at a time, but especially right before CPI, guys, I'm not trying to load up. Even if I was confident with my buys, we're not trying to do too much here, right? 15 cents over the 0.5% rule. Perfect. Put it in my pocket. This trade is moving nice already. And lastly, we went with some TSLL, 2 times Tesla leverage, 20.43 strike. I know it's a weird strike, but then again, you know what I mean? It's TSLL, 1 contract, 14 cents, which is largely above 0.5%. And look, this trade is pretty much almost 100%, not 100%, but like 80-75% profitable right now. TSLL analysis was very simple as well. I went all the way down here, guys, 20.43, which is for all intents and purposes, oh, you guys disappeared. My bad, guys. Well, now you get to see my beautiful desktop. Hopefully you enjoy. I think this is Dubai. So let me just pull you guys back up. And there it is. So I hit the wrong hotkey. So at the low of the day, Tesla was down there, TSLA was down there. 20.43 would be right about here. That would be an additional decline for TSLL of 15%, which means Tesla would have to go down an additional 8% since this is 2 times leverage. I mean, I'll take that trade. And this is literally, I showed you guys before, this is like 340, 330 on Tesla. I'll take a few there, but as of right now, only 1 contract. Pull back a little bit more, and I will add to the size of these contracts. But as of right now, in the face of CPI, in the face of bank earnings, and in the face of anything else the market could throw at us through the remainder of January, I'm just doing a tiny little contract here. If they want to assign me, perfect. But right now, we're sitting pretty, guys. Right now, the margin of safety is very good. And that's everything for today's video. So hopefully you guys enjoyed that. Oh, we also closed the UNH position at a profit. You can see it right here. We had the UNH call debit spread. You might remember I bought the dip after Powell on UNH when I thought it was done. And we got the call debit spreads here for $3.95. We closed them for $6.31. So just about, let's call it like $240 worth of profit, 60% ROI since December 20th when we started that trade. So that was a decent little profit close right there. Happy with the way that one went. But it did achieve our pretty much profit zone, which was targeting the 540 to 550 range. We got it down here, and I was targeting the upper end of here, 200-day moving average, overhead resistance. So this was pretty much the take profit area. So we took profits. So that's pretty much everything for today's video, guys. If you enjoyed it, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new. We are so close to 5,000 subscribers. Would love for you guys to get me there. And if you have any questions at all, I'll be answering a ton of questions on the channel tonight. So please feel free to leave yours. And lastly, if you're interested in the private trading group, my Discord, where you can find all of these trades in real time, I go over them all the time. These are all the trades since the inception of the Discord. If you're interested in all the trades in real time, the private morning live streams that we do for an hour or two where I live trade, you can chat with me all throughout the day, ask me your questions on your stocks and your options, and a whole lot more. Well, the link is always down below, guys. So hope to see you in there soon. And if I don't, see you back here, guys. Take care. See you tomorrow. Peace.